Good morning, traders. It is about 8:15 a.m., October 27th. Today's Tuesday, and I was working on the watch list, but there's really nothing. I got a few things up here, but nothing I'm really considering trading. The market looks extremely choppy, and like it's selling. It's going to sell off again today, I believe. I mean, good luck predicting the market. You never know. It might bounce from the huge selling off yesterday, but there's a lot of discussion about it being in a downturn or a big sell-off. So let's see here. Whoops, meant to go to markets. Yeah. So this is what happened yesterday, and pretty much across the board. So it seems like everybody's expecting the same thing or worse today, which could very well happen. It kind of seems like, at least leading up to the election, that's going to be the norm for a while. So just, I guess, from here on out, you want to be extra careful if you do trade, and strongly consider not trading. Yeah, so you just have to kind of keep an eye on things and take it day by day, whether you're going to trade or not. I'm not even sure that going over these is really worth anything, but yeah, so this one just popped up out of nowhere. Someone bought a few shares and pushed the price up, but there's no volume there, so that's no good. And then these guys really, there was actually a very nice run here. I guess there was a couple. Was this from this morning? Yeah. So I'm not sure, though, that I would have even taken any trades on these, because I feel like what happens with a stock like this is it's kind of getting pumped right now, and however that happens, but somehow it's getting pumped and it's going to get dumped, and the reason why I think that's what's going to happen is because SPI had a huge day a while back. What was it, September 23rd here, where it ran up to $46 a share, or almost 47, and it of course couldn't hold that, and it ended up closing the day around $13, and I guarantee you there was a ton of bag holders left. And look, the next day it opened up high relative to where it closed, and then sold off. So that was all the many bag holders trying to get out. But 343 million shares traded this day, and then the next day 29 million. So you can guarantee there's still a lot of people holding bags from that day way back in the end of September. And you can see this thing never really popped again. So right now the high of day is 1193 right here. So you probably got a lot of people from this day selling off. But yeah, I mean, so anyway, yeah, it had a couple of nice moves, but depending on your risk management and how much risk you're willing to take, you definitely could have played some of these. But knowing the past of this stock, it's pretty risky either way. And you can see right now it's already coming back down about to this. It's on its way to this support level here. And it's probably gonna go. I would predict before the market opens, it's gonna be in this area, but you never know. So then let's look at Sun W. Is kind of the same thing. It had a big day, maybe not quite so big as SPI, but back in, it was like the next day. So SPI was huge one day, and then the next day, Sun W ran up. From, let's see where it closed the day before, $1.15, and then it went all the way to $8.50, so well over 800% in one day. So that's a huge move. And then, of course, like always, they couldn't hold it, and it closed around $4. And it's not even trading in the $4 area yet today, so looks, yeah, the high of day today is over here. So there's tons and tons of selling pressure behind this, And I think these are kind of like the best looking of the day. I hate to say that because they don't look good at all. Let's see. I looked at that one, and I don't think I was impressed. Plus, the price is not in my price range. Just making sure there's nothing else. I haven't seen that Galt. Well, it just disappeared. We'll take a look at it just in case. But if it disappeared, that means selling off already. So, a day like today where it could be a big sell-off, one option is trading inverse ETFs, which are very, very different than trading stocks. Yeah, this is nothing. Very different. And, if you're not comfortable or don't know anything about it, I wouldn't even bother. But if you've studied up on ETFs already and you're familiar, you would already know that. So this is yesterday. Yesterday, like I showed you, was a big sell-off. And this is just one of them. But they all pretty much look the same. They all kind of follow each other. These are the inverse ETFs. You're basically shorting the market, but it moves in the long direction. So you don't have to take short positions. You still buy long. So anyway, what was I going to show you? Just that, they basically all follow each other pattern-wise. So this is SQQ, which is one of the more popular ones to trade. You could you could tell that by the volume. If I'm moving my cursor over the volume bars, and then you look up here, you can see in the millions of shares. But this is a 15-minute chart, which would have worked the best yesterday. Definitely longer time frames for ETFs. They don't move as much. You're going to be in the stock longer, a lot longer. Unless you get stopped out, of course. But if you figure out the direction of the market, like for example here on SPX, which is a little cheaper, but it moved exactly the same way as SQQ. You notice here it opens and it kind of trades sideways for a little bit, and then it breaks out, right? So if you caught this move, let's say you got in for the break of this level, right? Or maybe even the break of this candle, which was 535, and it goes to 536. You get in at 536, and then you ride the bottom of these candles up. As long as you were able to recognize that this is consolidation here, which is kind of signaled by these two topping tails that are at the exact same level, then you might keep your stop down at the bottom of this candle, or maybe a penny below or something, and that would keep you in. Otherwise, you would have gotten stopped out around 549, and you got in at 536. So it was like a 15-cent move or less. Sorry, what did I say? 536 to 549. So 13-cent move, and that took quite a while to happen. Versus a stock, like if you got in on this candle, that's at 10:30, and then you're getting stopped out over here at 11:45. So you're in it for an hour and 15 minutes to make 13 cents per share, which is a long time. And that's why, normally I don't really bother with ETFs because they're just way too slow. I'd rather get in and get out and get on with my day. But after a day like yesterday, it's kind of tempting. If you would have played this right, and this doesn't mean this is going to happen today, but if you would have played this right and caught it all the way, to here, 560 to from 536 to 560, that's 24 cents per share, which isn't bad. When you consider, I would love to have a 24-cent mover on a penny stock, but I would look to get that in a few seconds, at the market open, or maybe, a maximum of a few minutes. And here that's taking from 10:30 all the way to 1:45. So that's a long time to sit and hold a position and watch the chart. You really have to have a lot of time on your hands and patience to be able to make something like that work. And Weeble does have like the trailing stop feature, but so far I haven't used it. I tried a couple of times, and it doesn't give you any indication. It shows you that you have a working order over here, but I would like to see it. You know how if you put in an order to buy and you don't get filled, the order's showing up here on the chart, right? So I would like to see Weeble make the trailing stop move, however you have it set, say to trail $1 behind, or not, you wouldn't do that here in this case, but maybe 5 cents behind where the price is, or 10 cents behind, whatever it is, and then have the order, show that, that you're following that price range. That would make a lot of sense to me, and make me more interested in using the trailing stop feature. But since that doesn't do that, what I would be doing is put in a sell stop order and then just moving it up manually after each candle forms. So anyway, just double check here that nothing new or interesting popped up, which I don't think that's going to happen today. It just looks like one of those days. So that's it for today. We're going to call it a whole lot of nothing for the watch list today. So be careful out there if you're going to trade, and if you want to try those ETFs, definitely study up on them before you jump into a trade. They're not scalps, that's for sure. But you could take positions and hold them for a long time if you've got the time. But never hold those for more than a day, no matter what. Even if the thing just shoots up all day long, get out of it, because they are. I can't think of the word right now, but there's a decay involved in them. So they basically lose value every single day, no matter what the direction of the market is. So you're going to lose money on them regardless of the direction of the market if you're holding them day after day. So they're only tradable within each trade day, basically. That's how it works. All right, good luck out there.